If you have your mind set on a hedge fund career, you probably have thought about your career path very early on in college. Maybe you thought about joining a hedge fund out of undergraduate, but found it to be super hard. There are wonderkids who does Blackstone right out of Ivy League undergraduate and became a sector head at a Tiger Cup. But those are rare. So for the rest of you, what are the 5 paths that best position you for a high earning career on the buy side? Let's find out. Private equity is already buy side. Unlike your banking, management consulting, and equity research peers, you are as first-class citizen as the hedge funders. You have worked on a number of deals from start to finish. You know an industry or two. You have a hands-on introduction to M&A transaction at a brand name firm. You have the vote of confidence on technical skills. To highlight your strength, definitely lean into your knowledge of risk-reward in the industry you cover and your deep knowledge of your portfolio companies. Talk about how you conducted deep diligence. Think about scenarios for the business outlook and how you worked with management at your portfolio companies to showcase your experience in operating a business. You also have access to opportunities at all public equity funds, including activists, Tiger Cubs, all the way to multi-managers if you choose. In terms of area to address, you need to explain 1, why you didn't go straight to hedge fund after investment banking. 2, why public investing? Because your days of hiding behind 5 to 7 year time horizon are over. Talk about your passion for the public market and the excitement you get from identifying opportunities under day-to-day price fluctuations. You can go direct to hedge fund from investment banking. And as an investment banker, you have 3 main qualities that are sought after that make you more competitive than your sell-side equity research peers. First, you have strong technical set. You have worked on transactions and have access to information that sell-side equity research people don't have access to. So your modeling is more detailed. And in a hedge fund, investment banking level modeling skill is valued. Second, your work ethic is perceived to be stronger. It's a fact that investment bankers on average work longer hours. That's widely known. So you're perceived to have better stamina to work quickly and a lot when the market gives you more opportunities. And finally, there are just more absolute number of you on the buy side. Equity research teams are lean and not all of them leave after 2 years. Investment banking class just way larger and they go on to their exit opportunities after paying their dues. And many of them do end up at a hedge fund. And human beings have a tribal mindset. They like to hire folks with similar backgrounds, and as a result, investment bankers just get more interviews and more recruiter interest for having the most prototypical profile. Definitely lean into your technical skills and work ethic. You can highlight select transactions in detail. Talk about the strategic rationales, financial projection, valuation, linking your industry knowledge with numbers, which is what public investors do. In terms of area to address, it's similar to private equity professionals. Buy-siders might worry that you get too deep into the weeds, that you don't know what matters. To alleviate that, definitely convince them you know the 2-3 things that drive the business and talk about the high-level thesis of the deals you worked on. Good thing is, it is your job to follow the stock market and the business within your cover industry. You also have access to hedge fund clients, so there is an opportunity to know how to serve them and what they focus on for each covered stock. And you really get to learn how to pitch a stock. And for those who want to work at a quarterly trading style hedge funds, your current job is understanding what moves stocks in the near term. And that's highly transferable if you make an effort to learn it. For area to address, you need to be mentally prepared. Your opportunity set is smaller than your investment banking and private equity peers. There's nothing you can do to remedy the fact that there are so fewer equity research professionals in the history of finance because how lean each team is. Sell-side research rarely exists to activism because the depth of diligence and elements of deal-based workflow that you lack. Tiger Cubs prefer private equity background. Don't ask me why. I suspect it's a combination of tribal mindset I discussed before, because a lot of them have done investment banking and private equity. And the depth of diligence resembles more like private equity. You also need to make up for the perception of work ethic because you work relatively less hours. So make sure you talk about the amount of long-form reports you put out for your boss each year, and definitely how many concurrent earnings you need to work on during earnings seasons. If you're coming from an MBB background, you bring valuable skill sets too. You're trained to scope problems, which is similar to how you're given a stock idea to research, but no further instructions. You understand business operations, and you have deep industry expertise just like your private equity peers. Furthermore, you're comfortable presenting ideas to clients' top management team. So highlight your strength. You know strategic and operation framework better than your Wall Street peers. Bankers only focus on 2 financial aspects of running a business: raising capital and making acquisitions. experience. You, depending on the engagement you have worked on, could be exposed to nuances to all the P&L line, sales and marketing, growth, operation, and cost management. Definitely let the depth of your knowledge on the details of a business and an industry show through in an interview. You're better positioned for funds that focus relatively more on the business than on the stock. For areas to address, for consultants, the perception is you don't model as well as investment bankers or sell-side equity research associates. So wow them with detailed modeling, projection, scenario analysis, valuation, and convince them your ability to step out and see what really drives the business. The easiest way is to include in your stock pitch a screenshot of your Excel model and attach it with your cover letter when sourcing information or interviews. Hedge funds don't care for anything other than your ability to make money. That said, MBA is very helpful for career changers. I'm not going into this topic in detail because I've made a previous video on my personal experience and observation. Yeah, check it out on the upper right corner. I'll just reiterate. For example, to get an interview with Viking Global for internship, you definitely need to go to Harvard, Stanford, Wharton, Columbia, or Booth. And you will be competing with classmates who have pre-MBA experience in the other 4 paths I described in this video. So you have your work cut out for you if you want to land a great buy-side role with a non-brand name pre-MBA work experience. Nothing is impossible, and I encourage you to be growth-minded. You just need to know it's harder than you think it already is. And finally, the same applies to all of you who don't have a traditional background described in this video. It just comes down to how hard do you really want it? And are you a self-starter to find the guidance you need and to do the work? There you have it, the 5 best paths to hedge funds. You need to understand how you're perceived going into an interview. Each path has its strengths and weaknesses. Just make sure to showcase your strength and defend against the interviewer's perception and concerns to separate yourself from the pack. I hope this is helpful in your journey to your dream buy-side seat. Okay, quick announcement. I've started a job board for all of you that aggregates buy-side and sell-side equity research job posts. And I have added a section to my newsletter that will send out a daily email of the new job posts I found online. So if you're not a current subscriber and want to receive the daily email, please subscribe in the link in the video description. If you are a current subscriber, click on the same link, which will walk you through how to opt into the daily job post email. This is all done manually by myself, so there's no AI, no API or whatnot. That means I can only cover the US job market for now. I know a lot of you from the European market have asked me this. For now, I cannot help you out because I only have limited amount of time in a day. I hope this is helpful for your research job search. That's all I have on this matter. Please comment in the video description to let me know what you think. Now, if you want to hear more of my take on the investment management industry or other industries, I have 2 great videos for you in the upcoming screen. Make sure you check those out. If you found this helpful, please give it a like and subscribe to my channel for future contents on equity research, business analysis, and career advice. With that, I'll talk to you next time. Peace.